Westbound, far as he could make it. On denial, touchdown, looking for the darkest street on the bay. Hoping to start a revolution, a revival. A few days in and he can already say.
What's up, everybody? Welcome to my channel. Thank you for tuning in. If you haven't done so already, go ahead and like and subscribe. That means the world to me. It helps support the channel and enables me to make more videos. So I really appreciate it if you go ahead and do that. So diving in, as you saw in the intro, this video is about WP Carey. So let's go ahead and start off with some background on the company. They were founded in 1973. WP Carey, they have a long history of providing customized capital solutions to publicly traded and privately held companies, developers, private equity firms, and their portfolio of companies. They have a diversified portfolio of approximately 146 million square feet of corporate real estate across a really wide range of tenants, different industries, property types, and geographies. So one of the key selling points for me is that WP Carey has been operating in the net lease space, which, if you're not familiar with net lease, that means that the tenants basically pay for most of the property's operating expenses, from maintenance of the building and property to the property taxes and insurance. And they've been in this space for nearly 50 years. They have a very long track record, half a century. So, but as an income investor, I want more than just a good business. I really want tangible results. And in the REIT space, that means dividends or cash flow to shareholders like myself. WP Carey has increased its annual dividend for 24 consecutive years. That's very, very impressive. And they've already increased their payout again this year. And so it's on the verge of becoming a dividend aristocrat, which are companies that have raised their dividend for 25 consecutive years or more. So all that's really impressive, but here's the real story. WP Carey has increased its dividend every year since its IPO in 1998. That includes when it converted from a master limited partnership, or MLP for short, to a real estate investment trust, or REIT. Regular dividend growth is important for me, and it clearly also matters to WP Carey, which has increased its dividend regularly right through all of the good markets and the bad markets. So point number 2 has to do with property diversification. So I'm a big fan of diversification within my portfolio, which obviously helps reduce risk. However, I've increasingly focused on owning companies that have diversified businesses as well. WP Carey is almost a perfect fit in that regard. Its portfolio is spread across the industrial, warehouse, office, retail, and self-storage sectors. A fairly large other category, which is about 8% of their total rents, help round things out. And it also gives the REIT a flexibility to build new lines of business. Notably, the self-storage sector started in this other miscellaneous category before growing to a point where it earned a specific call-out in their operating reports. Another thing I like here is that retail is such a small percentage of the mix compared to net lease peers, many of which focus heavily on this space. That means WP Carey mixes well with other net lease REITs I own without overlap or doubling me up on the retail sector. So moving on to the next point of why I don't ever intend to sell WP Carey is their geographic diversification. WP Carey generates around 38% of its rents from outside the United States. Roughly 36% is from Europe. This is notable because it provides the REIT with a different avenue for growth that most peers simply don't have. In fact, industry giant Realty Income, which is a fan favorite among dividend investors, ticker symbol O, has only recently started to invest across the pond in Europe, in England, for example. WP Carey, for reference, they've already been doing it for the last 22 years. A good example of the benefit here is that most of WP Carey's retail exposure is in Europe, where retail isn't overly built like it is in the United States. So points 2 and 3 about property and geographic diversification provide a foundation for the fourth and final point, which is that WP Carey takes an opportunistic approach to investing. Simply put, it likes to ink deals both when and where others aren't as eager to roam. For example, it announced plans to start buying industrial and warehouse assets in the middle of 2020, essentially during the height of the COVID-19 pandemic. But the key is that it has the portfolio diversification to actually put money to work in just about any environment. This isn't the only way WP Carey is opportunistic. It's also willing to work with lower quality tenants that many of its peers choose not to. Investment grade credit makes up a relatively modest 30% of its portfolio. Since it tends to originate its own deal, however, the REIT gets to do a deep dive into potential leases, financial statements, so it has a good understanding of the strengths and weaknesses of its partners. That gives it the comfort to take on a little more risk, given that the cash it provides in a sale or leaseback transaction often gets used to support the property seller's growth. And like the low retail exposure, this approach balances really nicely with net lease REITs I own that I have a greater focus on investment grade tenants. So, in all seriousness, I would be lying if I said that I would never ever sell WP Carey. There's always a slight possibility that something changes and I decide to, push it out of my portfolio and move on. However, as long as this REIT keeps these 4 points intact, I can't see a reason that would make me want to sell. And for anyone looking at WP Carey, it's currently offering a generous 5.3% dividend yield, which, relative or compared to the average REIT yield of around 2.3%, using Vanguard's real estate index ETF as sort of a baseline comparison, it's very attractive. So while that's not the only reason, the entire package of this company is really attractive, and it could potentially find a place in your portfolio if it were to meet your financial objective. So that'll do it for this video on WP Carey. Thank you so much for tuning in. I hope you enjoyed this video. Please give a like and subscribe if you haven't already. And just as a friendly disclaimer and reminder, this content is for informational and entertainment purposes only. You should not construe any such information as financial or any other kind of advice. There are risks associated with investing in securities and in the stock market. So before you go out and invest in the stock market, please consult a licensed advisor. Thank you so much. Until next time, take care.